Good morning, everyone. Welcome to the On Time, On Target Morning Brief. We invest in fodder plot precision on a daily basis. Today, we're going to talk about the TOST IPO. If you're not familiar with TOST, as a quick overview, it's kind of like Square is as a payment processor, but it's so much more than that. And it's specifically designed for restaurants. TOST was around prior to COVID, and they were around that 5 billion point. So, I mean, a huge company. And once COVID hit, of course, a lot of the restaurants were challenged. I mean, workforce issues, reduced flow through, trying to pay the rent, that sort of thing. And a lot of companies had to pivot to delivery and, curbside pickup, those sorts of things. Well, Toast was uniquely positioned to give restaurant owners and operators solutions almost instantaneously, right? Because they had the system kind of ready to go. They had to tweak it and they said, here's what you need to do. And they helped folks able to do this to be able to kind of survive the COVID situation there, or the big downturn, if you will, during the initial days of the pandemic before things opened up a few months later or started to open up. So that's what they do. And they're IPOing today. Again, with any IPO, we don't know exactly when it will open. The price target has moved, so I'll review that for you once we get into the show. But right now, it's going to open at $40 a share, and as is tradition with most IPOs that are hot, if you will, that people want in on, you're not going to get $40 as a price. Direct listings, you'll get $40, but this is a true IPO, so the first trade could actually be up around 60, right? So you don't know where it is. I am not personally, the answer up front is I'm not personally putting my own funds or my client money into the Toast IPO. I think it's overpriced. We'll go why I think that. So that's our topic for today. The question is, what does Toast do? I'll actually take you to their website and show you some pretty neat things. It's really pretty interesting where technology has gotten us, and that's why I want to show you that. It's because I love the technology. I just don't like the price. If this thing were going off at a much better price down in the $10, $15 range, then I think it'd be a must have. It's not, so it's not a must have, right? And I will show you the track record of other IPOs. We'll do a quick review of the 2021 IPOs: Roblox, Palantir, Asana, Coinbase, Bumble, and Robinhood. 5 of those opened, and you had an opportunity for a better than the IPO price later on, meaning it didn't just go straight up. The only one that you had to get in right away, that if you didn't, you missed it, was Robinhood. And it's on the way back down. So you might actually still get an entry point. But I'll pull those charts once we get into the meat of the show. As far as our trading stuff today, you've seen the market is bouncing pretty good. We've got the Fed meeting this afternoon. People expect that the Fed did not say much about the reducing the bond buying that they're doing. Again, this is the taper tantrum, which is a topic for another day. But you can see that the futures are up. And again, that's 2 o'clock Eastern, 1 o'clock here in Texas, as far as when that announcement's made. And I expect we'll probably trend to the green to that announcement. And as long as there's no surprises, we'll probably end up having a nice green day, maybe the tune of 1% or even more today. So we shall see. So as far as the longs and shorts, there's a couple of attractive longs out there based off of earnings and an upgrade. SoFi, if you're familiar with SoFi, I think it's the SoFi Stadium I want to say it's the Los Angeles Chargers' new stadium. Don't quote me on that. It's one of the new stadiums that's out there. I should know. I watched the game the other night. I just can't remember which team it was. I think it was the Chargers. Arguably the coolest stadium out there. And yes, I'm a Raiders fan, even cooler than the Allegiant Stadium there in Vegas, which is the brightest spot on earth, or so they claim. So SoFi has their first buy rating, if you will. It's actually kind of attractively priced down there at $15. I may look into it for the longer term. Another one out there is EVGO, which is EVgo, a company out there. They do 24/7 charger support for electronic vehicles. They have an entire network out. They had a big social media campaign to hit 300,000 customers. They just hit it, and they just released earnings. So a lot of positives out there. As far as the only short I have out there is a pretty strong company, which makes me not want to short it, but that's FedEx. FedEx just had an earnings miss. They released it this morning, or maybe last night. Can't tell from the chart. One of the two, and they are they got a big price target cut, and they're having labor shortage issues, and they just outsourced a bit to Atlas Worldwide, which is another airline company out there. So they're starting to struggle a little bit. Am I worried long term? No, not really, but I do think in the short term we're going to see it head lower. So we may try to trade that down today. All right. With that, if you're catching us on replay, make sure you subscribe and hit the notifications bell. If you want to join us in the room, it's $25 a month to come on in the room, and you can ask me anything real time through my chat window or Q&A window. And with that, let's go ahead and get started. All right, welcome back. Here's our lineup card for the day. Standards disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. Full disclaimer information is available at ototnow.com. All right, welcome to a Wednesday, September 22nd, first day of fall. If my memory is correct, doesn't seem like fall here in Central Texas, but just got a note there from you, Burner, that another meeting is in progress. That's weird. Must be something wrong with the link. Tactical objectives. We're going to talk about how to invest in the TOST IPO, and then the question is going to be, what does TOST do for the day? Our flow will be long, short, open, short, long, meaning we'll have market review, headline review, and then we're going to take a look at the IPO as far as Roblox, Palantir, Asana, Coin, Bumble, and Hood. And again, the first three acted the same in the fact that they dropped flatline and then went higher. The second two went up and then fell hard, they both fell hard from the get-go and have not recovered. And then Hood's the only one that went up. Again, that's Robinhood. So we'll take a look at those charts. We'll get in the short-term execution, do our trading, and see if we can make some money. And if not, we will move on. Contingencies and academic resources are standard. All right, let's go over to TD Ameritrade and take a look. Here are the long and shorts I just talked about. We've got the S&P 500 on the left. Have the long in EVgo. I like that the best. Then SoFi, and then our short here in FedEx. When we look at where the market's been, again, a little bit of, we saw the big news out of the Evergrande, $300 billion in potential losses / unpaid debt coming out of this weekend out of China, and how that's going to affect everybody. Well, they just announced this morning they are going to make their at least next payment on the debt that they have. So that's a good sign that things aren't as bad as they initially thought, but it's certainly not over. So we saw, you can kind of see, we'll zoom into the 5-day here. You can kind of see that this was the weekend, and then market basically fell all of Monday. A little bit of hope at the end, gapped up, and then by the time it's pretty much a straight shot down to the open. And then yesterday, even though we started out in the green, pretty much barely ended in the green for the S&P. Dow was actually in the red. And then we've got some optimism this morning. So really, when you back out and kind of look at this chart, where are we? Well, we're starting to get near these levels of, if we stay down here, we will break these channels. If we don't, then they'll simply rewrite these channels and they'll just be a little flatter, but continuing up. There's certainly lots of challenges out there. You've got the debt ceiling debate, which passed the House last night, but it's going to have some challenges passing the Senate. So we shall see. And then, of course, tax reform is on the agenda. We've got some of the initial numbers out we talked about the other day, but we'll see how it all plays out because there's a lot of unknowns there. All right. Let's go ahead and take a look at CNBC.com for our futures, and I'll refresh these here so you can see these. All right, so in the green across the board, 0.5% basically across the board. Let's take a look around the world. Head over to Europe, bright green across the board in Europe, almost 1% across the board. Shed the Evergrande tensions, if you will, and then everybody's awaiting the Fed. Even though the U.S. Fed is obviously local to us here in the United States, it does affect things worldwide. All right, Japan is down. The rest of Europe is up, so that's good. Not much motion in the bond world. Oil popped a little bit. Don't see a real reason there. Gold and silver are mixed. Crypto, pretty much unchanged. I'd say less than 1% move, and crypto is kind of unchanged there. So, all right, back to the pre-market. We'll take a look at some headlines. So it's funny, this FedEx downgrade. So FedEx is sitting at $235 a share, and the price target downgrade, they went from $335 to $297, which cracks me up about analysts, right? Because The current price is 236, and they moved it from 335 to 297 in a downgrade. So they're saying they're downgrading the stock, but it should be $61 higher than it is now. It's really kind of weird how these analysts play the game. If they don't do that, then they end up whipping all over the place and it makes them look stupid. So I guess this makes them look smarter. I don't know. I've never really understood that, but it does crack me up. All right, here's your SoFi pop. Jefferies initiates it at a buy, says stock can surge more than 60%. I looked at the numbers. I'm not sure I buy 60%, but I do think it goes up from here. All right, other headlines. September slump. September, you find a way to slump, right? We do have the end of the quarter coming up, so a lot of window dressing going on. So expect, then we have some tax reform out there that people are worried about. So there are a lot of things to be concerned about as far as motion of the markets. So don't expect it to turn around and scream higher just because we are on a dip. Okay, Robinhood announced this morning cryptocurrency wallets for Bitcoin. Cryptocurrency wallets for Robinhood, which includes Bitcoin. And again, if they, the reason I like being in the cryptos through MSTR or ETHE for the top two is because I don't want to have to remember my 128-digit password or write it down or lose my hard drive or whatever, all the horror stories that are out there for people that are not, that end up losing their crypto. You're kind of outsourcing that now to Robinhood. Remember, you're outsourcing it though. If you do this to a company that was fined $170 million for selling order flow, and they've had all kinds of other issues, like locking you out of being able to sell when the market was crashing. Remember that March 2020? I bet you do now. So there's a lot of reasons to hate Robinhood. Nobody's perfect. Not trying to say perfection is the expectation, but certainly they have not handled things well in the past. All right, trying to find some more headlines that might be driving things today. All right, I don't. Phased retirement. I do like that phrase. I would say most people out there, when I talk to folks about retirement, are not looking at a full retirement, a standard cliff, work 40 plus hours a week until I tell off my boss and then go home and never to return. And then I golf from then on. A lot of people are not interested in that retirement anymore. Now it's more of a phased, hey, how about I work half the hours and I work from home, or work from home full time, since people are working from home part time anyway for a lot of us. So anyhow, phased retirement, I think, and also that helps with the financial impact of retirement, because instead of cutting that income to zero, now you're simply reducing it by a significant amount, but something that you can manage. All right, let's go ahead and take a look at some of these IPOs. Let's look at the best one, I will say, of the breed. So you have Robinhood opens up down here at around 35, popped all the way up to 70 or so. It's been kind of selling off since, but the news is basically everybody who bought from day one from Robinhood is up money and has been up since you've been in it. The story is definitely different. It's exactly different. If you go to Coinbase, everybody who bought in Coinbase at the IPO has down money and has been down money ever since. Now, Coinbase is starting to look attractive. It's profitable now. The triple, quadruple bottom is down here around 200. So, you could get into it. I'm going to stay clear. But I wouldn't have a problem. Somebody's like, hey, I want in that. I'd be like, yeah, okay. I'm not, but you can. BNBL was Bumble, the dating app where females initiate the contact. Again, there is, if you bought on IPO day, you've been down pretty much every day since, right? This thing is fading and fading fast. I don't know if the bottom is in. It's supposed to be profitable within the next year. We shall see. I would not even touch investing in a dating app personally, but, consider. All right. Roblox, if you remember, Roblox was kind of a must-own stock, if you will, and I think it still is. You should have some in your portfolio. If you bought it here, it kind of flatlines. So the reason I bring these up on IPO days is you don't have to rush in and buy at first opportunity. You've gotten, with these next three, Roblox, Palantir, and Asana, you've gotten better entries in the future in that first couple months. So let these things do that, flop around, unless it's a must own, let it flop around on the first day and then go in from there. We'll look at Palantir next. Palantir, same thing. It's revisited its IPO price, direct listing technically, several times since it's been out for about a year now, right? So you've had more opportunities. You don't have to just simply close your eyes and buy at first opportunity. All right, got 30 seconds to the market open. Let's go ahead and get us switched over to TD Ameritrade, and we will set up for the open. Good morning, everyone. Welcome to the On Time On Target play of the day. We have 5 seconds to the market open on Wednesday here, September 22nd. Here we go. All right, bells extra loud today. On the far left, we have our 1 minute chart, the S&P 500. You know the futures are up nicely. So we look at the longs first. EVgo is kind of a smaller name out there that's gapping up. And we also have SoFi, which a lot of people know is gapping up earlier. I kind of like this entry in SoFi, but we're going to let it kind of flop around for a second. Lots of volume, almost 1 million shares in the first, 28 seconds. All right, our short of the day is FedEx. Not really a fan of trying to short into something that's such a great company, but so we're going to look at that last. But all right, the bottom end here, 1560, 1575 would be our entry. I don't think we're going to get that entry. I'm looking at EVgo and seeing if they're even open. They are open. All right. I do like this SoFi, but I really don't like the entry. FedEx falling like a rock. So we should have a 15 to 20 cent stop on SoFi here. It's just where do we draw our line? Can't get the chart to stand still. All right, we'll zoom in a little more on what's going on in the market. All right, I like this one better. EVgo, it's a little better of a story. 808 will go a 10 cent stop. Okay, we get to go even further then. Actually, we'll do an 8 cent stop. We want this to come down a little bit. We don't want it to break even. But if we go 807, 815 is our entry point. Then it would have to, I'm going to zoom out for just a second. Was up at 837. I kind of want to capture that. All right, we will use a 805, so 813 entry point. If this holds 813, that's an 8 cent stop. 805 covering the bottom to 813 is what we're looking for. Got SoFi going back higher. Don't want to look away from this thing because it's going to pop up on me. So we're covering at the bottom on EVgo, and 813 is our entry. Okay, there it is, 813. We are in it. We are covered at an 8 cent stop down here to 805 technically. So can't just touch the line, but I'm not going to scroll out to draw the line there. And we are taking this long. So there's your arrow, so you can keep things straight. All right, so 813 plus 8 is 821 is our first R unit. And then I have to zoom out a little bit here to get to the rest. 821, so 829 is our next level. And then 837 is our exit. So there's your lines for the, oops, I think we just busted out the bottom of it. We did. So red X of shame, we busted out the bottom of that trade. So you have to be out of it. You'd have to redo all your math if you weren't in it yet and wanted to get back in it. But at that 813 entry, it did bust that 805 floor. So we are done with it. All right, let's look at what's going on in the bigger picture out there. TQLB, that's a speculative name, up 15%. Clickstream spec up 3%. We have energy up 2%. Trade Desk, Bank of America. I think the banks are going to actually look pretty attractive coming out of this Evergrande thing because people are going to be looking into how strong our banks are and they're going to be impressed with what they see. We really went conservative. I use the analogy of like 9/11, right? So 9/11 happens and now airport security 20 years later is basically unchanged, right? We put so many requirements in place to stop the 9/11 from happening again. And, it hasn't in 20 years, so you never know what you prevented. But even though if you were a terrorist out there, that'd be kind of the last thing you would do is try to pull the same stunt. You would do something different, but we're still protecting against it. So when you relate that to the finance world and relate it to 2007, 2009, and the global financial crisis, all the constraints we put in place to stop that from happening again, you could argue it was an overreaction, but it does keep us all safe. So whatever your take on it, it's there, and our banks are rock solid. They really are. Try being, try having a decent amount of money and a good salary and getting a refinance. You still have to fill out 40 pages of documents, right? And sign your life away. And you're like the perfect client. Just imagine if you weren't the perfect client, right? So it's kind of an overreaction to 2005 where a signature and a heartbeat could get you a house, right? So I do think the banks, back to the investing, I think if you want to invest in the financial sector, JP Morgan's my favorite. I do like BlackRock and Blackstone from the investing side of things, but I think they'll all look pretty attractive. JP Morgan just announced they announced a 10.1, I think, or 11% increase in their dividend. And they announced a date that they already had announced that, but they announced today that when that date is actually going to pop that dividend. So consider. All right, let's look at what's in the red for today. Facebook down. Don't see a reason why. I mean, I guess Mark Benioff from Salesforce took a couple shots at Facebook last night and said we're all paying for their policies. I did not read the article. I just saw the headlines. I don't know what he really said. But obviously that must be driving the stock lower. But only about 20 names or so in the red there. So overall, not too bad. And the market is kind of holding that 0.5% higher for the open here. All right, let's take a look to close out for the day on what TOST does. So this is their website. So when you think of websites, I look at this and I'm like, oh, this is Square, except it says TOST on it. So if you think the popularity of Square and the ease of use, if you've used it, literally email address, tie it to a bank account. You have a couple little pieces of equipment, which I think they send you for free. I don't know or it's not much if they do. But anyhow, you can basically set up a business and charge through Square. Everything happens automatically. It goes from the credit card into your system. It makes these amazing reports for you, which are the basic reports that you need no matter what business you're in, and then kicks after they take their fee, which happens automatically, which I know people don't like, but that's also nice because you don't have to sit there and pay for something. It's just every time you get paid, they get a little bit of it. And then off into the bank account it goes. So it's kind of pretty slick and all your reports are built in. Well, if you look at this TOST, it looks just like Square, right? You got your smartphone, you have your terminal. If you go to places like Summer Moon or other businesses that are, established businesses, a lot of them run off of Square. Well, this is TOST, right? It's the same thing, except it's optimized for restaurants. So contactless ordering, all of that delivery stuff, all of the pickup from the curbside pickup, all of that stuff kind of it wasn't born out of COVID, but it certainly was popularized out of COVID. And then when you see their pricing, you get small business is generally to get you hooked, right? In the fact that you'll probably grow into a bigger businesses because successful businesses grow. They kind of can't help it. And then you get into, growth, and then enterprises, of course, was when you have several locations, like over 16, right, is kind of what they're using here. So that's all I wanted to show you. What's interesting though, here's that if you've ever signed a Square tablet, it looks just like it, right? There's your card reader on the side. Some of them have it up top. Sometimes you put the card in, whatever, but it happens right there. It's got the tip automatically ready for you to go. So you can be in a good mood and leave your 18% minimum tip is what they usually have it set to, which I always kind of chuckle. But anyhow, pretty good. So here's what's interesting about this company is they only make 10% of their revenue from their subscriptions, meaning from from the payment, what they're paying to the system to have the system, that scares me out of investing in it, because if they had 90% subscriptions, that's one thing. People get hooked on subscriptions, right? If you own a business and operate a restaurant and you have TOST, you're going to stick with that for decades unless somebody clubs you over the head, right? I mean, once you have a software and a system in place, generally you just don't mess with it. But that's not true. That's only 10% of the revenue. 90% of the revenue comes from the point of sales transaction. That 2.9% that you get from credit card fees, which all these people must be in cahoots together, because it seems like it's always the same no matter who you go through. And when I see that, so it's like, okay, Square's making a ton of money. There's several out there. Stripe is out there. They all seem to pull this 2.9%. Well, here's the analogy that I use for you, and this is why I don't like really investing in any of those, is if you remember Charles Schwab, which again, I custodian assets through Charles Schwab. So they are a discount broker, but they're more of a full-size broker-ish, if you will. When they cut their trading to zero, when they cut the price from $6.95 to zero, what happened within 24 hours? You either cut your pricing to zero or your company died, because there's going to be so much money flows out. So what I don't understand is somebody has to be able to come along and offer a 1.9 across the board instead of a 2.9. And that would drive everybody down. If you think gas wars of the 80s, that sort of thing. But I think, if they're all in cahoots saying, well, nobody's going to do it. Well, Schwab did it. Others reacted quickly. TD Ameritrade didn't. They lost so much in outflows in the first 48 hours, because they were one of the last ones to go to zero for their commissions, is that it basically brought the entire company to its knees, and Schwab bought them. I mean, that's like a holy crap kind of moment in the industry, right? Of one executive boardroom decision. So I could see, TOST, Square, Stripe, all of these companies out there who are thinking this 2.9% is guaranteed. We'll wait till somebody goes 1.9 and then has a good idea to go 0.9, right? When you hear, a lot of people think inflation is the only threat out there. Well, deflation is also a threat. If you think what technology, and this is what Kathy Wood talks about all the time, it's a topic for another day. She talks about how technology replaces jobs, which makes things cheaper over time. And that's true. If you look at a lot of things get cheaper over time. I'm going to throw that out there, and I know you're thinking of 1,000 things that don't, but there are things that do. And same thing with, transaction costs for trading. Really, it costs 2.9% for me to swipe a piece of plastic in a restaurant. I think that's appalling. I really do. And I think it's not going to last forever. And there's going to be a bloodbath in some of these companies when it gets corrected, if you will, down to either free or next to free. So that's an opinion, but I'll close out on that for the day. Again, so far, so good. Green day in the market. We're waiting for the Federal Reserve here at 1 o'clock here in Texas, and we'll see what they have to say. And we'll talk about it tomorrow morning. Have a good one. Bye.